Right now, I mean, there's likely this massive oil tanker just idling somewhere near the Strait of Hormuz.
Just sitting there.
Right. Literally just waiting to see if a digital signature from a president, thousands of miles away, is going to clear its path or send it straight into a war zone.
It's a terrifying position to be in. And, the delay between a political decision and the physical reality of a supply chain, that is where all the volatility lives.
Yeah. And we are watching that play out in real time, I mean, across every single asset class today. So a huge welcome to everyone tuning into the NovaStream 24/7 broadcast.
Thanks for being here, guys.
Whether you are tracking the live crypto markets, watching BTC, ETH, and SOL bouncing around, or you're monitoring the global financial indices.
The S&P 500, NASDAQ, Forex pairs.
All of it. We are so glad you are here with us. We are your hub for the breaking news the absolute second it hits the wire.
Right.
But rather than just reading a dry list of headlines to you, we're going to bring you the highlights of the day.
Because the headlines alone just don't cut it right now.
No, they really don't. Our mission is to synthesize the chaotic movements in global conflicts, shifting financial corridors, and these massive AI tech swings into one cohesive picture.
Yeah, we really want to help you understand what is truly driving those tickers you're watching scroll across your screen right now.
So to do that, I mean, we have to look at the underlying mechanics. Today's market is not some neat mathematical formula where a clean jobs number makes a line go up.
Oh, definitely not. It's a web of cascading effects.
A total web. You've got a physical conflict in the Middle East directly altering the geopolitical risk premium of energy.
Right, which is happening right alongside isolated nations building totally separate digital economies.
Yeah. All while the foundational technology of our era, AI, is swinging wildly between massive market busts and unprecedented multi-billion-dollar valuations.
It's a lot to take in. So, let's start right at the epicenter of today's market tremors.
Right, the energy sector. It is incredibly volatile today, and oil prices are just bouncing around erratically.
It's like crazy.
Yeah. And this is all tied to a flurry of breaking headlines regarding the highly fragile U.S.-Iran peace deal.
We are seeing these unconfirmed reports that the Strait of Hormuz might actually be closed again.
Oh, it really closed again?
Yeah, following deadly overnight clashes between Israel and Hezbollah, Iran is demanding that all fighting must stop as a primary condition of the deal.
Okay, and didn't the Islamic Revolutionary Guard Corps get involved?
They did. They reportedly radioed commercial ships to avoid the area entirely.
Oh, wow. So when the IRGC gets on a radio and tells a commercial vessel to steer clear, I mean, the market has to instantly price in a supply shock, right?
Spot on. I mean, the Strait of Hormuz is a physical choke point. Roughly 20% of the world's global oil consumption passes through their narrow 39-mile-wide waterway.
That's just a massive bottleneck.
It is. Energy markets cannot wait for diplomatic confirmation. They have to price in the worst-case scenario the absolute second that radio transmission is intercepted.
And the diplomatic confirmation is turning into an absolute logistical maze anyway. I mean, Vice President J.D. Vance actually delayed his trip to Switzerland.
Right, where the final technical negotiations and the formal signing ceremony were supposed to happen.
Yeah, he says he plans to go but doesn't even know when. And adding to the bizarre timeline, Iran claims their president has already signed the deal digitally.
And President Trump signed it digitally on Sunday?
Right, and then physically at the Palace of Versailles on Wednesday.
The timeline is just totally fractured.
It makes no sense.
No, it doesn't. You have an agreement theoretically ratified via digital signature, but U.S. intelligence officials are simultaneously reporting that Israeli Prime Minister Benjamin Netanyahu is likely to continue attacks in Lebanon.
Because of intense domestic pressure.
Yeah, despite this ceasefire calling for a halt, Israel's ambassador stated they halted offensive operations but won't compromise their security or leave southern Lebanon.
So the piece of paper says one thing, and the military maneuvers say another. Well, this friction between foreign policy and reality brings us to the domestic fallout in the United States. And look, before we get into these budgetary details, we need to be really clear with you.
We have to put a disclaimer here.
Yeah, we are strictly impartially reporting the source material here. We are not taking any political sides. When you look at the U.S. budget gridlock right now, it is a total minefield of partisan politics.
Depending on what side of the aisle you sit on, you might be outraged by the details we're about to share.
Or you might be outraged by the opposition to them. But stripping the politics away entirely, the market only cares about one thing:
The math is not adding up.
Right. The market operates on certainty, and legislative gridlock is the ultimate creator of uncertainty.
So because of all this geopolitical chaos, President Trump's requested $1.5 trillion military budget is hitting major snags in Congress.
Huge snags. His administration is trying to push through $350 billion via a special non-filibuster bill.
But they are facing heavy bipartisan resistance.
Yeah, and why is that? Because the administration has declined to disclose the actual cost of the Iran war.
Senator Mark Kelly, a Democrat and Navy combat veteran, specifically stated that they cannot write them another blank check without knowing if the mission makes sense or what the final price tag will be.
So look at how the market interprets that gridlock. The assumption is usually that the U.S. has infinite resources to project stability.
Right, the infinite money printer.
Yeah, but when Congress halts a military budget of that scale, it signals to commodity traders that the U.S. response capability is paralyzed.
Or at least its long-term strategic funding is. And it gets even more complicated when you look at where funds are currently being shuffled.
Oh, the Secret Service thing.
Yeah. The Trump administration recently redirected about $350 million from the Secret Service to White House security upgrades.
Right, and the White House insists that roughly $400 million in private donations are paying for a newly constructed luxury ballroom.
But they acknowledge taxpayer funds are being used for security enhancements, which includes a military bunker underneath that new ballroom.
This is just the craziest causality loop the market is struggling with.
Yeah.
You know, it's like a Jenga tower sitting on a shaky table.
That is a great way to put it.
I mean, every single piece, from Israel's security demands to U.S. domestic budget gridlock, threatens to topple the entire structure.
Yeah.
So how do energy markets and global indices manage to price in this multi-layered geopolitical chaos?
Well, you have a domestic budget shortfall directly altering the geopolitical risk premium of oil. Investors cannot confidently forecast stability when the funding required to enforce it is tied up in debates over Secret Service allocations and blank checks.
So the geopolitical risk premium, the extra dollars added to the price of a barrel of oil just for the fear of disruption, stays artificially high.
Exactly. That tension, where governments and traditional financial levers are locked in political paralysis, is what is pushing global capital into entirely new, unregulated parallel systems.
Right. When the U.S. budget gridlocks over Middle Eastern conflicts, nations facing heavy sanctions are not waiting around to see what happens to the dollar.
They are building their own exit doors.
And for everyone watching the BTC ticker on the stream today, this is monumental. Russia is no longer treating cryptocurrency as some abstract regulatory thought experiment.
Not at all. On July 1st, 2026, Russia will formally legalize Bitcoin and stablecoin payments for cross-border trade.
That is huge. This is the combination of a massive, quiet test run, right?
Yeah, they ran a 2-year pilot program that processed roughly $11 billion in crypto-facilitated commerce last year.
11 billion.
Yeah, they proved the concept, and now they are operationalizing it on a national scale.
But how does this actually work mechanically? I mean, logistically?
Well, exporters of oil, metals, and grain can now legally accept Bitcoin in what is being called a regulated bonded warehouse system.
Okay, and the goal is to completely bypass SWIFT, right?
Right.
The global messaging network that traditional banks use to move money across borders.
Right, so they can trade freely with allied countries like China, India, and Turkey.
So the bonded warehouse aspect is fascinating because well, it's as much a legal fiction as it is a physical space.
Yeah, in traditional finance, a bonded warehouse is a secure facility where goods can be stored without paying duties until they are moved into the domestic market.
Right, and Russia has basically digitized this concept.
An exporter can move digital assets like Bitcoin into this state-monitored digital staging ground.
Okay, so the legal title of the goods transfers via a crypto transaction while remaining outside the standard domestic tax and currency jurisdiction until the trade is finalized.
It is a way to handle the transaction without the money ever touching the heavily sanctioned Russian banking layer.
It's like a financial airlock. You open the outer door Bitcoin to the vacuum of space to grab international capital and bypass Western sanctions.
I love that analogy.
But you have to seal that door completely before opening the inner door to the Russian economy, because domestically, the Russian ruble remains the sole legal tender.
Right. Cryptocurrencies are strictly forbidden for everyday domestic payments like buying groceries or paying rent.
Though they did officially classify digital assets as property for legal disputes.
Yeah, but they put a strict $3,900 purchase cap on retail investors, while professional institutions face no limits at all.
So the airlock metaphor holds up. And that strict inner door is designed to prevent capital flight.
Because if you let everyday citizens freely convert their rubles into Bitcoin, the hyper-volatility of crypto would depressurize the entire domestic economy.
The ruble would just collapse.
Yes. So acknowledging Bitcoin as property is a reluctant but necessary concession. They have to give it legal standing to protect their massive industrial exporters in court.
They are trying to harness the utility of a decentralized network to solve a massive geopolitical problem without letting the ethos of decentralization infect their own domestic monetary control.
That is the paradox they are navigating.
But, I have to push back on this. Is it actually possible to maintain that airlock? Can a highly centralized government successfully utilize a fundamentally decentralized, permissionless asset without it eventually bleeding into the broader population?
Honestly, history suggests it is incredibly difficult. Capital finds a way,
Well,
Sure. The moment you legitimize the asset for the institutional class, the moment you say this is real property with real value, you create a massive black market incentive for the retail class who are capped at that $3,900.
the structural integrity of that airlock is going to be tested every single day by citizens looking for the same financial lifeboats their government is using.
Definitely. And speaking of lifeboats, while traditional nations are leaning on parallel digital pipelines, the actual physical infrastructure powering this entire digital economy,
The server hardware and AI tech markets.
right, it's seeing its own violent whiplash.
Yes.
For our tech investors watching the NASDAQ queue right now, the divergence happening in the tech sector is just staggering.
It really is. We are seeing a massive split between the companies promising AI solutions and the companies physically building the components that make AI possible.
So let's look at the busts first. Over in the European markets, trading in a French tech company called 2CRS, I was completely suspended on the Euronext Paris exchange.
Suspended entirely.
Yeah, after a catastrophic 43% stock collapse. A New York short seller named Grizzly Research published a report alleging the company fabricated revenue from a 2024 contract.
Oh, wow. And that single accusation dropped their market cap from 1 billion euros to below 600 million euros in a flash.
2CRSI is strongly refuting the claims, but the exchange halted trading entirely.
And that kind of absolute free fall in software and speculative tech stands in stark contrast to what is happening on the hardware side.
Yeah, this is where it gets incredibly confusing for the average investor.
You have the memory chip stocks companies like Micron and Samsung. They're having their best year in history. They're posting record gains.
Huge numbers.
Yet they are trading at massive discounts compared to AI hardware giants like NVIDIA. We are talking forward price-to-earnings ratios of 9 for Micron and roughly 6.5 for Samsung.
Well, Wall Street is treating them like discount bin items.
Right. It's sheer irony that the picks and shovels of the AI gold rush are priced like that. If AI is truly revolutionary, why is Wall Street treating these critical component makers like they are selling a fleeting fad?
Because Wall Street is deeply skeptical. They are terrified of the cyclical boom and bust history of commodity chips. They are looking at hyperscaler demand and bracing for impact.
Break that down for us. What is hyperscaler demand, and why does a low PE ratio, which usually means a stock is a great value, suddenly imply fear?
Well, hyperscalers are the massive cloud infrastructure providers, your Googles, Microsofts, Amazons.
Right.
Right now, they are in an arms race, buying up servers and memory chips at an unprecedented, frantic rate to train their AI models. That is the hyperscaler demand. But Wall Street views hardware as a commodity cycle. Massive supercomputing buildouts create temporary, unsustainably high earnings peaks.
Oh, I see.
In a normal market, a low forward PE ratio implies value. But in a commodity cycle, it implies the market believes the earnings have peaked.
So investors look at those triple-digit growth rates and assume that once the massive data centers are built, the demand will just vanish.
Yeah, they refuse to pay a premium today for earnings they believe will disappear tomorrow. Also, they fear AI techniques might actually reduce memory footprints in the future.
So even though Micron and Samsung are desperately trying to lock in long-term supply agreements to prove this isn't just a temporary spike, Wall Street is basically saying, we don't buy it. Eventually, your revenue will fall off a cliff.
They are pricing in the cliff before the companies even reach the edge.
That is wild. And this incredible volatility isn't isolated to the hardware side. It is ripping through the software startups, too. Look at the AI coding space.
Oh, yeah, the vibe coding trend.
Right. Early in 2025, there was a startup called Cursor. They were the absolute darlings of the industry for sparking the vibe coding trend.
Vibe coding is such a fascinating shift in how we interact with machines.
Can you explain how it works?
Sure. Instead of a programmer painstakingly typing out Python or C++ syntax, vibe coding allows a user to interact with the AI using plain, natural language.
Acting more like a creative director guiding a designer.
Yeah, exactly. The AI handles all the actual syntax in the background. Cursor built an amazing platform for this.
But then, Anthropic released Claude Code. And literally overnight, social media declared Cursor obsolete.
Claude Code's underlying architecture was so natively good at understanding the broader context of a codebase that it made Cursor's specialized wrapper feel redundant.
They were practically wiped out.
But today, they just received a massive $60 billion lifeline from SpaceX.
60 billion. That is just an unbelievable turnaround.
It shows how fast the tectonic plates in the AI industry are shifting. SpaceX don't just give them money for charity.
No, of course not.
A massive aerospace company needs independent, deeply integrated coding infrastructure that is not tied to the ecosystem of a tech mega corporation like Anthropic or Google.
Right. They needed that specific vibe coding capability dedicated to their own massive engineering hurdles.
It proves that in AI, a product rendered obsolete by the broader market can be resurrected overnight by a deep-pocketed player who requires a proprietary version of that exact tool.
The scale of the computing power these companies are throwing around is just hard to wrap your head around. But what is truly mind-bending is where this compute power is going next.
Oh, this is the best part.
We are no longer just using supercomputing clusters to write software or generate internet art. The exact same infrastructure driving the memory chip boom is now jumping into the physical world.
AI is leaping from digital coding straight into mapping human biology.
Midjourney, the AI startup famous for letting people type a prompt and generate surreal, photorealistic images, has officially launched a medical division.
Which sounds like a simulation glitch, but it's real.
It does. They just unveiled a 60-second full-body scanner. It looks like a high-end spa treatment. You're lowered into a shallow pool of water, and it uses sonic wave technology to map your entire body.
The scanner embeds 40 proprietary ultrasound-on-chip modules created by Butterfly Network.
But the physical hardware, the water and the ultrasound chips, is only half the equation, right?
Yeah, the real magic, and the reason Midjourney is involved, is the underlying mathematics processing those sound waves.
Right, they are using a mathematical technique called full waveform inversion. Now, this was originally developed by the petroleum industry.
When oil companies look for underground reserves, they send massive sound waves deep into the Earth's crust.
They know that a sound wave bounces off solid limestone differently than it bounces off a cavern full of crude oil.
They capture those complex echoes and use massive supercomputers to reverse engineer a 3D map of the underground geology.
Midjourney is taking that exact same math, powering it with AI supercomputing clusters, and applying it to human biology.
They are converting raw acoustic waves bouncing off your internal organs into highly detailed 3D images.
They took the macro-finding oil in the earth and shrank it down to the micro-finding tumor in a kidney.
The math is identical. It is simply a difference in scale and the sheer volume of computing power required to process those acoustic reflections in real time.
Midjourney wants to open a San Francisco wellness spa by the end of 2027 and run 1 billion of these scans a month by 2031.
A billion a month. That is ambitious.
Yeah, but the medical community is intensely divided on this. Cardiologist Eric Topol is highly skeptical.
He points out a fundamental physics problem, right? Ultrasound cannot penetrate thick bone to image brain tissue.
Right, he argues the term full body scan is misleading marketing. But Midjourney countered by citing a 2020 NPJ Digital Medicine paper,
arguing that their specific full waveform inversion math can actually convert raw ultrasound data into brain images by accounting for the bone distortion.
And on the other side of the debate, you have practitioners looking at the systemic failures of current medical imaging. Radiologist Nisha Mehta is cautiously optimistic.
She is looking at the major downsides of traditional MRIs. The massive financial cost, the fact that a scan takes an hour.
And the severe claustrophobia patients experience inside those tubes. She sees the potential to solve those issues.
But she heavily stresses that this technology needs to be in the hands of trained medical professionals.
And importantly, this scanner currently lacks FDA approval for actual medical diagnoses.
That's a huge caveat.
Yeah. I read this and I try to picture it. It sounds like human echolocation. It's like a digital bat mapping your insides while you lounge in a high-end spa.
A digital bat. That's a mental image.
But I have to ask you, is this genuinely democratizing medical imaging? Or is this just an elaborate, incredibly expensive parlor trick for Silicon Valley wellness enthusiasts who want to track their longevity?
Well, it's the ultimate question of validation versus aesthetic. I mean, the spa environment, the shallow pool of water, that is consumer packaging. But beneath that packaging is a genuine cross-pollination of technology. Applying oil exploration algorithms to biology via AI compute is a staggering intellectual leap.
It really is.
However, the burden of proof is the dividing line. Taking a highly detailed acoustic picture of the body in a wellness center is one thing. Validating that specific image to make a life-or-death medical decision requires clinical trials, peer review, and FDA approval.
A spa environment simply cannot provide the rigor required to replace an MRI in an oncology ward.
No, definitely not.
So what does this all mean for you, the listener, watching these NovaStream tickers flash across your screen today?
And all connected.
We started this broadcast talking about how the markets used to feel rational. You could look at a quarterly earnings report and draw a straight line to a stock price. But today's highlights show us that the underlying mechanics of the world are fundamentally changing.
It forces us to ask a much larger question about the future of authority. Think about it. If AI compute power can adapt industrial oil algorithms to map human biology in a 60-second spa dip without waiting for traditional medical gatekeepers.
And if geopolitical gridlock is forcing nations to build decentralized crypto pipelines that bypass the global banking system entirely.
Are we nearing a tipping point? We might be entering an era where technology doesn't just disrupt traditional human institutions, whether that is the SWIFT network or the FDA, it bypasses them entirely.
That is a phenomenal thought to leave on. The old geopolitical and financial structures might be gridlocked, but entirely new parallel systems are being built underneath them in real time.
Literally as we speak.
A huge thank you to everyone tuning in. Keep your eyes on the NovaStream tickers. Watch those live crypto charts and global indices, because these massive shifts in technology and global corridors are going to continue driving the markets right before our eyes.
Stay curious out there.
Stay informed, and we will see you next time on the stream.